Hello and welcome again to Charles Kelly Money Tips. I hope you're having a great day. It's freezing cold here in London, but nice and sunny today, so it was a good day. Now, the question I've asked you here is, are you still stashing your cash or hoarding it under the mattress or under the floorboards in your house? Which would be surprising, you think, in this day and age, that people still keep cash in home. Apparently, according to Sun Life, 1 in 8 over 50s, people who are over 50, still keep cash in the house. And this goes back to your gran keeping, their savings in a biscuit tin or literally under the mattress or in the mattress. And it is surprising how many people still do that. Some people don't trust the banks. Some people just like to see their cash and hold it. But obviously, there's considerable risks with that. Fire, loss, burglary, notes going out of date. I was standing behind a guy yesterday in the bank, holding everybody up, changing all these old notes that he had for years, the old £20 notes, because every few years they change the notes, I think to stop forgers and criminals who buried their money before going to prison. So obviously it's not a great idea. Apart from anything else, the money will obviously lose value over time. Over time, that money will just disintegrate in value because things are going up in price, and that money is literally losing its spending power. So if you do hoard cash and you want that money in a physical form, a tangible form, then why not consider gold or silver, coins, small bars and that sort of thing, instead of keeping it in pound notes. Now, the difference here with gold and silver is that it should, over time, retain its value against inflation. And in certain times, it could go up in value faster than inflation, like in a time of crisis, a bit like now. I think gold has increased by about 20% in the last year. Silver's gone up by about 12-15% in the last year. We've had some turbulent times. We may have some turbulent times ahead with this coronavirus. You see that China has halved tariffs on American goods. Seems like it wants to get its economy going again. It's stumbling at the moment. Germany's economy is stumbling. The manufacturing is stumbling. And the central banks around the world are pumping money to shore up the stock market. Now, you can't underestimate this virus because, I saw something on BBC last night and how it has spread, that initially China tried to keep it under wraps, but then during that time, when it had already been found in Wuhan city, Wuhan province, 5 million people flew out of that city for going on various trips for the new year and that sort of, before they managed to have this lockdown. So millions of people have travelled out of that city, and the number of cases has just gone up all over China exponentially. And it's only now they're starting to really react properly. And these are just the people in China. What about the people who've flown out around the world? They're on cruise ships, they're in the UK, they're in the Philippines, in America, all over the place. So you can't underestimate. And these are the sort of things that can trigger recessions. You just don't know what it could lead to. They might get a grip on it and stop it very soon, but it could lead to major problems. So in those sort of circumstances, gold and silver have tended to be a haven for cash. And I'm not suggesting you put all your money into gold and silver, and I'm not even your financial advisor. You've got to take your own financial decisions and get financial advice. This podcast is only for entertainment purposes, but I'll give you some facts about gold, and here are 5 reasons why, in fact, silver could surpass gold's success in 2020. Now, this comes from Bullion by Post, who are obviously trying to sell you their services and get you to buy gold and silver. But just think about this, for instance. First reason is the gold and silver ratio for the past 12 months shows that 1 ounce of gold is currently worth 87.96 ounces of silver, far higher than the historical average of 50. So normally 1 ounce of gold will be worth 60 times the price of silver. It's now 87 times the price of silver. So what they're saying is, for investors, this could appear to be, silver could be undervalued, and it could push up towards the old ratio and could be a bargain. Now, that was something told to me by Kevin Green in one of his wealth seminars. He said that the ratio should narrow. but that remains to be seen. Let's see what happens. Now, number two is many mines have reported a production slowdown in the last year. This will likely decrease output when 2019 figures are released, and there is already a supply deficit. 2009, they're just saying that at the moment, to cut it short, is that there is a supply deficit, and this could affect the price. Number three, tech usage. Gold is actually used in tech things. It's used in circuit boards, computers, TVs, smartphones, an array of other things. So it's not just there to look pretty like gold is in fact. So it has a strong electrical conductivity and a use in printed circuits. So there is an increase in demand, obviously affected by the economy, but what we're saying about silver, it is used, it's not just there to look at. Number four, central banks are diversifying to cope with the global economic slowdown. Gold has benefited from this demand already and will continue to do so, but silver hasn't had a bull run since 2011. It hasn't had a period where it's gone up a lot since 2011. So it could be that silver will take off. Silver's always considered the poor relation of gold, but it eventually sort of catches up. And five, historically there's been an elastic relationship between gold and silver demand. Now, the 1980 and 2011 both demonstrated that when gold demand and prices rose, there is a slight delay before silver demand rises too, so it lags behind. So if gold keeps its high profile, and that's gone up by like 20%, silver could follow and trigger the narrowing of the gold and silver ratio. So you've got to make your own decisions. What I'm saying is that rather than keeping cash under the mattress, you could, if you want to, go out and buy some silver coins, gold coins. They're not that expensive. You can buy them lots of places online. You can buy them from the high street. You get better prices the more you buy. And it's just a bit more fun than keeping, notes and that sort of thing under the mattress. I'm not suggesting you should keep them under the mattress. Make sure you've got insurance if you're keeping them at home, or put them in a bank vault. Like Metro Bank, for instance, has bank vaults for about, starting at about £20 a month. For your valuables and that sort of thing. Many people, as I've said before, are actually underinsured when it comes to valuables in the home. They think they've got X amount of insurance cover, but in the policy it might say your valuables should not exceed a certain percentage of your overall contents. So if you've got £20,000 worth of general contents and carpets and curtains and furniture and stuff, but your gold and silver, you've got £10,000 worth of gold coins, you're not insured properly unless you've declared that to the insurance company. And most people don't declare it, they just fill in the form and that's it. But when it comes to a claim, the insurance company will come in and say, you haven't insured yourself enough, therefore we're going to cut down your claim, or they could just throw it out altogether. So, in fact, there's a story here that somebody in a house in Stroud recently, in Gloucestershire, that some gold coins were found in an empty home, have been sold for £80,000. So somebody had died or just left some gold coins in a house worth £80,000. One of them was a rare coin from 1937. So just be careful there and manage your money. Finally, I'd say that in another survey, a quarter of UK couples are actually uncomfortable about discussing money at all. So they don't discuss money between themselves. They don't plan ahead. Maybe the family have grown up not discussing money. We don't discuss money. No, that's private. There's an advert on telly like this, isn't there? But my suggestion is you should discuss it at least once a year. Sit down and preferably get a review from a financial advisor. Even if you review things like where your savings are at the moment, what sort of mortgage have you got? I mean, mortgages, you could be wasting thousands of pounds a year on the wrong kind of mortgage. For instance, thousands and thousands of people are on a variable rate mortgage. That means they're just on the standard variable rate. Now, this is a bit of a con, in fact, the variable rate. The variable rate used to be linked to the bank base rate. So if you're on a variable rate and the base rates were low, you were okay. But now that interest rates have gone right down, the lenders now make up their own variable rate. And instead of having a variable rate that maybe is 2% above the normal base rate, which would make your rate 2.75, you'll find that a lot of these lenders have an artificial variable rate of say 5%, 6% sometimes. It's a bloody con. So get back to these lenders or try new lenders and see what sort of rate you can get, because if you're going to stay with that mortgage for the next 25 years or the next 10, 15, 20 years, you might as well be on a better rate. And sometimes just by making a couple of phone calls, you could save £200-300 a month, which is several £1,000s a year. And over 5-10 years, that's a lot of money. So don't stick on the variable rate. This is why you need a review. Where are your savings? You might be in an account that's kind of obsolete at the moment. The bank have done a little rejigging and said, oh, let's leave these people in an account and we'll drop the rate down and then get new borrowers in and give them a higher rate to make us look really good. And the other people, we'll just forget about those until they come into the branch and see us. Oh, we'll send them a little letter in that, that tiny little print that you open the letter, you think, what's this rubbish? And you can't even read it. So you just tend to ignore it. That's what the banks are doing. They're churning these accounts. So if you're in an old, and I've got an old ISA at the moment, I've got to go and sort that out because that's it started off on a high rate, it's going to gradually be moved down. So loyalty doesn't pay, you have to move your money around or go into the bank and say, what's going on? I want a better rate on my money, otherwise I'm off. And then they'll jump. And same thing with your pensions, your insurance, all needs reviewing at least once a year. You can do it yourself, or you can get a financial advisor in to do it for you. So that's my final tip today. I'm not saying go out and buy gold and silver. I'm just saying, it's quite a good way of putting some of your cash in, or your savings or your investments into something that tends to do well during a crisis. A lot of people are saying gold is going to go up in the next few years, but who knows? It's all speculation. But if there was a financial crisis, a recession, a downturn, then a lot of money will be going into gold. Or you can just sit on the gold coins for many, many years, and you can always they're liquid. You can always get your money back on gold. You can always go down the road and get money when you need it. In fact, many gold coins are in fact a part of the currency, so it's always exchangeable for cash. So there you go. Thanks for listening. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate, and enjoy more money. Hope you're having a great evening. Thanks to people tuning in. Dave, good to see you. And everyone who's listened on the podcast on iTunes and Stitcher. And thanks for listening. I'll speak to you again tomorrow. Bye for now.